Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Our guest today is Rafi Farber from the Endgame Investor. Welcome back, sir.
Thanks for having me again, Ivan. Good to be back.
Yeah, it's always great having you come down to Wall Street Silver. Such a pleasure. With all the chaos and all the craziness going on in the markets and in the world and the economy, I wanted to get you on to talk about everything that's happening in the markets, gold, silver. First, let's start off with the most important subject for us, silver and gold. It's been an interesting year in 2024, especially for gold and silver as well, playing the catch-up game. Where do you see gold going from now to the end of 2024?
I don't know exactly where the price is going to go. That depends on what the bank derivatives do. I mean, I just had this interview on my channel recently with a guy named Brian Kuzmar, who is a gold and silver shop in Fort Lauderdale, and he says right now that his main business is selling numismatic coins, not marketing them necessarily, but he has estates that are being liquidated because old relatives die, grandparents die, and then you have all these gold and silver coins that they collected, and
Right.
he's getting a lot of money on them. But on bullion sales straight up from his coin shop, he's not getting much. So right now we have a very low interest in just straight up bullion, and he's not making much money on that. And the way he puts it is that that gold and silver bullion, at least in terms of physical stackers, our percentage of the market is a pimple on an elephant's butt. That's how he puts it. And I agree with him, and that's true. But the thing about that is it's very tricky because once because the reason that the demand in the gold and silver markets in terms of physical bullion actually holding your hand is so small is because the dollar still works. But in a
Yeah,
world where the dollar doesn't work anymore, all of a sudden you can have everything change. Like if the dollar isn't working, then where do people go? They can't go on above the pyramid where I think Bitcoin is, and you can argue with me about that if you want.
mhm,
They have to go below it, below the dollar where gold and silver are. So I'm saying in terms of like the dollar running out of steam, then you'd have everybody in the world simultaneously because all other currencies are based on the dollar going into gold and silver. So the question really is not necessarily where gold and silver are going to be by the end of the year, but the question is by the end of the year, are we going to have a situation where the gold where the dollar no longer functions?
right.
And it could be. I'm not so set on that. I'm still waiting for the final financial crisis where the Fed is going to have to print about two or three times as much as it printed in 2020, which was two or three times as much as it printed in 2008, which is two or three times as much as it printed in 2001. So the question is the monetary system based on the dollar going to survive the next printing round?
Hmm.
Maybe it will by December, by 2025. I'm not so sure. So that's really the question, not necessarily the dollar amount of the exchangeable rate between gold and silver, but is the monetary system as we know it still even going to function at all? That's how I
Absolutely.
see it.
Yeah, absolutely. Why do you think Bitcoin is above the pyramid?
Why is Bitcoin above? Because in terms of the Austrian school, my shirt. So the Austrian school theory of what money is, and in terms of what you can understand in your own head as to what money is, right? The reason you wake up today and you're not murdering people for food is that you know where you fit in the basic division of labor, right? You wake up in the morning, you're like, okay, what video do I have to make today? How many tweets do I have to make today? What
Right,
business connections do I have to make in order to maintain my reputation as Wall Street Silver, so and so, sponsorships, whatever? You know what to do, basically,
right,
right? Because you have an idea of what the dollar is worth, and you're basing it on what? You're not basing it on the future. You're basing it on the past because you know what it was yesterday, and therefore you know what it was 2 days ago, et cetera, et cetera. So the dollar is based on gold and silver because that's how it was born. And Bitcoin, when it was born, when somebody decided to trade a Bitcoin for $1 or whatever amount it was, why did he decide to do that? Because he had an idea of how many dollars he could risk, right? How much purchasing power does he actually want to risk buying this thing called Bitcoin? And
right,
maybe he's like, I don't know what a Bitcoin's going to be worth 10 years. I have no idea, but I'll risk like $5 on it, whatever. And then somebody else like, I'll risk six, I'll risk seven. But each of them had this idea in their heads, how much stuff, possible stuff that I can buy today, am I going to forego by getting this Bitcoin? So it's all based on the dollar.
Hey everyone, I just found out about this local coin shop, Greenville Gold and Silver, that sells high quality used gold and silver jewelry by weight. You can invest in precious metals at crazy low premiums and show your swag at the same time. Some pieces sell for just a few bucks. They have the best prices, best selection, and new pieces regularly. And if you ever need to cash out, your metal value is secure. Greenville Gold and Silver, check out the link in the description below. Thanks.
And the dollar is based on gold. So cut
Right.
out the middleman, the dollar, and then the question becomes, can Bitcoin be based on gold? And my contention is no, it can't. Because if it's going to be based on gold, why not just have a gold backed blockchain? Blockchain, I have no problem with blockchain. Blockchain, I like.
Right.
It's a good technology. In terms of Bitcoin, I just see it as an empty safe that you can open up, by getting a blockchain code for the next Bitcoin that has nothing in it.
Yeah.
And maybe I'm wrong, but I'm just going to play it. I'm going to play it safe with gold and silver, as history has been for 5,000 years, and I'm not willing to risk it.
Yeah, I absolutely agree with you there, Rafi. Now, before we start recording, we were talking about shrinkflation. You got some examples for us.
Yeah, and I don't mean to make light of this. I just want to preface this example that this is a little bit of a sad example. I was in the town of Majd al-Shams yesterday, which is on the Israel-Lebanon border. It's a town of Druze. The Druzim are they're not Arabs and they're not Jews. They claim to descend from Jethro, who was Moses' father-in-law, and I don't. They're a very secretive religion or ethnic group. I can't
Hmm.
really say much more about them other than they have really big mustaches and cool pants like MC Hammer. But they're friendly with us, and we have no problems with them, no ethnic problems with them. So I was at the memorial service for the 12 children that were killed by a Hezbollah missile on Saturday. I went there on Monday, and they were handing out water bottles for people in the crowd, because we needed what it was hot, it was a soccer field.
Right.
So they were handing out these water bottles, and I can hold them in one hand. They're 200 mils, right? One of them is Arabic. You can see here if you can see the Arabic letters.
Oh yeah.
The other one is Catalia. These are manufactured in Jericho, which is a Palestinian Arab town. Just to point out that you can't really quench your thirst in a hot day in a soccer field on these tiny little 200 milliliter bottles.
It's yeah, no.
The standard retail size is what, half a liter, 500 mils. So these are, about 40% of that.
Right.
Um, it's not like it was a scorching day, but still, I mean, I'd never seen as a kid water bottles these size.
No.
And it seems that shrinkflation is affecting everything, including the Arab towns here, including the Jewish towns and the Jewish towns, everything.
Yeah. And the interesting part about that, Rafi, is you look at the inflation data that comes from, the government or whatever they put out. They don't account for shrinkflation. They don't account for all the other data. They don't even, but yeah, like, if the data was recorded how it was back in the 70s and 80s, inflation would be a lot higher right now. So what is really reality? How do we know what's real?
We know what is real objectively in terms of what real money is, which is gold and silver. We don't know how deep the illusion of the dollar is right
Right.
now. We don't
Right.
know how much it's actually worth and how much it should be worth. That's all very blurry. None of us know that. And in terms of what the government counts and what it doesn't count, I just wanted to spell one notion here. It's not that the government is so slow and they forgot about shrinkflation and they're like, oh, well, it takes a while for the BLS staff to put a new thing into their formula, so we got to give them time. They do this on purpose. They purposely do not count shrinkflation so as not to reflect into the CPI,
Right.
because they're trying to prolong the psychological breaking point as to when the public finally wakes up and says this is all crap.
Right.
And it's not just in the monetary system. In the dollar itself would be the foundation of all governments, and all governments based on the dollar. But we're seeing it. We're seeing in Venezuela now, where the people are like, enough of this Maduro stuff. We're going to knock down the statues. And hopefully the army is on their side. I'm praying for the Venezuelan people.
Yeah.
They've had enough tyranny, and even this might not have made the news, but even in Israel now, there's been a revolt and an invasion of an IDF army base by the Israeli people
Wow.
For a group of soldiers that are being prosecuted by the Israeli army for the way they've handled certain prisoners. And we don't know what's true and what's not true, but whatever is or isn't, whether Maduro won the election or not, or whether the accusations against these Israeli soldiers are true or not, the point is the people are getting pissed off
Right.
and they're not going to take much more, and it's happening all over the world, and it's going to happen simultaneously in all countries at the same time, not the exact same time, but this is the general feeling of hyperinflation leading up and revolution, and we're out the door.
Yeah, I agree with you. It's pretty scary actually when you look at like even in Canada here, the price of everything. Just 3, 4 years ago, there was a bottle of perfume, like it's $160 my mom got it for. I think it was like 4 years ago, exactly, 3, 4 years ago. That same bottle of perfume now, exact same one is like $230 now. It was just 3, 4 years ago from 160. So like little things like that, prices of bread too, it's absolutely crazy. When does it hit that breaking point where people wake up and say, our money is worthless? They will go to the bank and start pulling out all their money across the world, and then the game of, the financial system completely collapses.
That's a question that nobody can answer with certainty. No,
Right.
nobody can. But what I can do is tell you what I'm looking at as the next potential breaking point. And this could be one, and it might just be the next stage to the next thing. I don't know exactly what it's going to be. But what I'm looking at is look, the last two crises that we saw, 2019 and 2023, right? 2019 was the apocalypse where the repo market buckled up and interest rates went up to 10%. And in 2023, the regional bank suddenly needed a bailout of how much it was it? I don't know, a trillion, whatever. I don't even remember. I don't know what it was. It was a
Hmm.
lot of it was a lot of dollars. Um, so the repocalypse in 2019 happened when the bank reserves in the system reached the pre-QE3 level, right?
Right.
There was QE1, QE2, QE3. So QE2 ended at about 1.4 trillion. And then QE3 happened, and then there was QT, quantitative tightening, which is the opposite. And then we went down to again about 1.4 trillion in bank reserves, and then all of a sudden there's this repocalypse and the repo market freezes up.
Hmm.
We don't have time to get into the details of exactly why that happens to that number. But in 2023, you had the huge increase in reserves in 2020 from all the COVID printing, and then a descent back down to about 3 trillion in reserves, and then you had a regional banking crisis. So now we're about 3.25, 3.27 trillion. So my theory is that when we hit 3 trillion or somewhere around there, we're going to hit another banking crisis. And whether that is the end or just another major event towards the end, I don't know. But look for that and see what happens to the monetary system after that. It could very well be the end. And the point is, you want to be prepared for that being the end of the monetary system rather than trying to place bets on it. Because if you keep placing bets, you're never going to bet on the end. And the easiest way is just to bet on the end and then just be secure in that with gold and silver. And if it's not, it's not. You just hang on to it and wait for the next thing.
Yeah.
You're secure either way.
Yeah, absolutely. I agree with that. What do you remember, Rafi, your first gold or silver purchase? Do you remember when and what you got?
Yeah, I do actually.
Oh,
I was
nice. Huh,
it wasn't any kind of educated thing or anything. I wasn't a market watcher. I didn't know what was going on. I didn't really understand what was going on in 2008, but I had heard Peter Schiff, which is where a lot of us had come into this movement from,
right.
and he deserves a lot of credit for that. It was 2012. I got married in 2008, in July 2008, and we got a whole bunch of money for from donations for the wedding, and we put it on our bank account, and then from there into the stock market, and then we lost like 60-70% of it like 2 months later. So like
Jeez.
that's what inspired me to like say, okay, what the hell's going on here? I gotta look into this because I have no idea what's going on. And then in 2012 I knew enough, so I was like okay, I'll buy some silver, and I don't care if it really goes up or down. I mean, I care. It's gonna affect me, obviously, but I took like 20-30% of my value, my net worth. I was like, okay, I'm gonna buy some junk silver coins. So like I called Peter Schiff's company, Schiff Gold, and I said, look, I want a bag of junk silver. And I was like, I want the biggest coins that you can get in junk silver because I didn't want all dimes because I had to move them to Israel. I was going to move them in like, this is 2012. So like I kept it with my parents and I shuttled it over to Israel through the airport like in 6 or 7 trips over 10 years. And I finally got it here. But it was a junk bag of $500 face value, junk silver half dollars.
Wow, that's incredible. Do you still have that, the junk silver?
Yeah, I still have it.
Wow, that's incredible. It's interesting how before 2012 we weren't paying too much in the pay attention in the markets, and then boom, not too long later, and it's absolutely incredible. What else are you concerned about in the markets, or what else are you keeping an eye on for? Just like what you were saying earlier, you were keeping an eye on certain things for the economic turmoil. What else are you keeping an eye on for? Like housing markets, anything like that?
Yeah, well, there's two things. Where I'm looking at potential stress points is commercial mortgage-backed securities, right? The commercial mortgage market.
Hmm.
Even though the Fed doesn't own much of that, so it's not like on the center of the monetary system. This stuff is owned by a lot of regional smaller banks. So I'm looking at that to see when it collapses, because before we started recording, we were talking about fertility rates, right?
Yeah.
This might seem unconnected, but the major reason for the fall in fertility rates is that people look at each other's families and they look across from themselves at their cities and say how many kids are my neighbors having or my friends having, and they subconsciously say, oh, I'll have the same amount of kids. So
Yeah.
and then what happens is you have a major interruption, right? Let's say COVID or the 2008 financial crisis, and then that kind of puts families on hold. Like imagine the beginning of the movie Idiocracy, where the smart couple is saying, well, let's hold it, the economy is not ready, and then people get older and they have less and less kids, so like gradually fertility rate starts to decline as people hold off, and then they see their neighbors and they say, oh, well, I'll have less because they're having less, or
Yeah, if
I'll
all
have
your
two because they're having two. So
yeah,
what this has to do with commercial mortgage-backed securities is that the disturbance and the force of mortgage-backed securities was the lockdowns, right? And now people have a culture of working at home. So they're like, should I work in an office? Should I work at home? They look across from their neighbors and they see, oh, this guy's working at home. I'll work at home. And then commercial real estate goes less and less value because less and less people need it because you have these big disturbances in the market that never really get repaired.
right.
So first of all, commercial mortgage-backed securities I'm looking at, and I'm looking at the reserves in the system for the next financial crisis. That's what I'm looking at right now. A month from now, I could look at something else. Who knows?
Yeah, it'd be crazy too once you because I know a lot of banks are investing in commercial backed real estate, and they have a lot of losses that are unrealized, so it's not actually put on the books yet as official losses. But when do those unrealized losses become actual losses for these big banks like Bank of America if they have billions and billions and billions of dollars of commercial real estate that's underwater right now? When do they become realized, or can they become forever unrealized losses?
When enough banks, first of all, they won't ever become fully realized losses. They'll become bank reserves.
Wow.
Right? Because
Wow.
what the Fed does is they buy all the bad debt when they have to, because the banks are like, look, Fed, if you don't buy this, we're going to have realized losses and we're going to fail. And when we fail, the banks under us are going to fail. And when they fail, the banks under them are going to fail. And you're going to have a whole
Whole
domino effect
domino.
of everything failing, which is exactly what happened in 2008. So in 2008, they said, you know what, don't fail. We'll just take all your bad debt and we'll turn them magically into something called bank reserves. Now there's like 3 trillion of them. And they just keep
Jeez.
like swishing around the system like ghosts that don't really exist. So no, they're not going to become fully realized. But when enough debtors say we can't pay this back, so the question is, to rephrase your question, when are enough debtors going to say we cannot pay this back and we default? And then
Right.
that moves to the Fed, which says, okay, you can't pay it, we'll pay it. We'll give you reserves. And then reserves become, instead of 3 trillion, 7 trillion. And then consumers say, you know what, screw this. I don't care about your stupid reserves. I'm getting rid of the dollars and I'm buying as much gold and silver as I can. That's the real question. We don't know exactly, but it's happening soon. It's coming. The hockey stick is here. The vertical move is coming. And I hope it comes soon before the world erupts in World War III, which would be a lot worse than a financial crisis. Bring on the financial crisis. That will
Yeah,
end the wars because they won't have any money to fund the bombs. And
right.
then we can continue on this planet, which is, a good thing.
Yeah, it's I absolutely agree with you. You nailed it there, Rafi. And the interesting thing is, do you think there's ever time in the future, just like in the Romans, that like these central banks, like let's say the Fed, you know how we're talking about if the bank comes out and says, "Oh, well, you have to buy these unrealized losses, or they become losses," and then the domino continues. Is there ever going to be a day in the future where the Fed says, "We're not going to buy your debt, bad debt," or
No,
no?
no, they're
No.
going to keep buying it until the dollar dies.
Uh,
If there is theoretically it could happen. Theoretically, if the Fed
yeah,
says,
yeah.
we're not going to let it, we're not going to buy it this time. But okay, if they did that in the 1950s, they would have gone back to the 1930s. If they did that in 1971, instead of ending the dollar, the gold window, they would have gone back to 1933. So look, if you want to go back to the monetary situation of 1933, we're going to go back to that, either by hyperdeflation and the Fed saying no, which will collapse everything, or hyperinflation, which is basically the same thing in gold and silver terms. Doesn't really make a difference for gold and silver. It makes a big difference for dollar holders because in
Right,
one hand,
right,
because if you have hyperdeflation, the dollars that you own, the physical paper dollar bills that you have in your hand are going to be worth a lot more. But if you go the hyperinflation route, then everyone who holds any dollars in any form is going to lose everything, and the only ones with any money are going to be the gold and silver holders.
right,
So there's a difference in terms of who ends up on top in the end game, and I think that's us. And whether it's going to be dollar holders or gold and silver holders, the point that we're trying to make is that if you hold gold and silver, you'll be fine either way. Whereas if you hold dollars, you'll only be fine if if the Fed finally decides for any crazy reason that I couldn't possibly fathom to say no, and that's it.
yeah. No, you absolutely nailed it. And Rafi, every time you come on, it's such a huge, huge pleasure going through everything in the markets. But before you leave, where can people connect with you? Where's your YouTube channel? I'll also put it in the description below. But yeah, where can people connect with you?
Yeah, check me out at Substack, endgameinvestor.substack.com. I write about these issues 3 times a week. You can check out my YouTube channel, Rafi Farber. And I also have a Patreon where you can subscribe for $3 a month or more if you want, where I go into the religious issues surrounding money and government. And this week we're going to go into why Jewish law forbids fractional reserve, evidence from the Mishnah and old rabbinic writings.
Absolutely, that's fantastic. I'll put also the descriptions to all your links below for everyone to connect to. But Rafi, again, thank you so much. Thank you everyone for watching. It's a huge, huge pleasure. And yeah, I'd love to have you back on soon, Rafi.
Cool, great.
Awesome. Talk to you soon.